Hey, what's up, guys? Hope everybody's doing well. Name is Antisocialfx, and I'm just going to be going over EU and an hourly position that I took for a 1 to 10. Wanted to break down this pair. This is going to be the first YouTube video where I actually break down. I do want to start posting a few more, definitely a lot more breakdowns, as I go through my trades in the near future, just to give you guys some insight on, how it is that I trade. Basically, the way that I'm trading is supply and demand trading along smart money concepts. And what I do is I use my hourly as my higher time frame for directional bias and the 1 minute to execute on the lower time frame. So the same thing we're looking for on the higher time frame, we're dropping down to the lower time frame and waiting for that same entry criteria. And guys, excuse me, I'm a little sick. So just wanted to really break this down for you guys. As you can see, I did talk about this in a case study for this position on the Discord community, and you can see we have EU, we have a very overextended move, and as we all know, any move that's overextended, especially with strong impulse to the downside or to the upside, is going to have to get a retracement, or is going to need to retrace eventually. And this is exactly what it did. We do have this level of interest right here. Just gonna map out the whole zone. Just to give you guys the heads up, we have this one right here as well. But even this one, guys, this is really not a level where I'm looking to trade from. But it's always good to point out your overall and understand that from this point on, we did have another strong impulse, the same as we did as here. This will be our extreme. Is going to be our mid POI, and is also a level of interest where we could take targets or target some of our trades. Price could definitely give a reaction at this point once it's headed, or if it reaches this supply level right here. Nonetheless, this is not we don't want to be focusing on this, guys. We do want to be able to look at our most current and play around with our swing structure, swing high, swing low structure, and just kind of see where our substructure takes us. But as you can see, like I was saying, guys, we do have a very overextended move. This move is going to need to retrace eventually. What do we have here? We had a sweep to the upside. We also have a sweep to the downside, guys, with these equal lows. The price sweeping to the downside. This was an area where I was potentially looking to get involved. Why? Because we did have some inducement right here, equal highs inducement as well. I believe price never gave us a reaction. I'm not sure if I had the zone a little bit bigger or if I did get involved in some trades. Nonetheless, price violated and pushed a lot higher. We're gonna take this out, and guys, this is where we technically have our shift in sentiment. So you do know that obviously once you have a retracement, price is gonna have to go into bullish order flow to get back and retrace back to these to the supply level or this supply level or the extreme, whichever one it is that you're looking at. So guys, the term is just basically you do want to wait for your shifts in sentiment, which is exactly what we got here. This point on, I was able to map out the swing high and swing low. And there's something interesting about this move, because once we got this change of character, guys, we also got, it wasn't just any random break, guys. In our shift in sentiment, we did get a strong break with impulse to the upside. So this is something that I like to look at, that we obviously we take into consideration. This is going to be one of our confirmations when we're looking to get involved. Obviously, we have a strong impulse to the upside, guys. Not only that, we do have inefficient pricing along this whole impulse to the upside. Inefficient pricing right here. And this is something that I teach as well, guys. Whenever you have an impulse move, and you see a wick to the upside, wick to the downside, inside the impulse, you just mark the high of the wick, low of the wick, and this is going to be an order block, guys. If you drop down to the 15, which is what I did just to refine it, you'll be able to see it a lot clearer. So the way that I like to do it is obviously, we're doing an order block refinement, so it's going to be the last down before the up candle, before that impulse. Then we go back to the hourly, guys, and this was the move right here. For this trade, guys, I ended up taking a median entry, so I took 50% median of that zone. Sorry, let me just put it right here. Median entry, I believe it was about a 12 pip stop, if I'm correct. Yep, something like that. Let me just move this back a little bit, guys. And I took this, I wanted to target the swing high. For me, a 1 to 10 was more than enough. This is usually what I target on the lower time frames if I'm entering on the 1 minute. 1 to 10 for me is more than enough, guys. In essence, if you're trading with the bias of the market, guys, one thing you got to understand is price should, in essence, keep making higher highs and higher lows, especially if you're catching the pullback. Obviously we could target a little bit higher. Nonetheless, I just wanted to target our swing high, and like I said, a 1 to 10 is definitely more than enough. So for me, it was a little bit before this swing high move, which is perfect. Just kind of reassures me, the trade has more of a probability, and this is a great risk to reward, considering that we're entering strictly off the hourly. Just put it right here. Yeah, 1 to 10. Just bring this out. Guys, the moment that I started going break even, that I activated my break even, was on the break above this structure right here. I got triggered in on last Friday morning during New York. Had about 2 hours left for my session, and no moves were developing on the 1 minute for my pairs. So this was definitely an opportunity I wanted to get involved in, and the reason for that being, I'm just gonna explain the confirmations really quick. Let me just put break even for you guys. Like I said, guys, we have a very overextended move. We have a sweep to the upside, sweep to the downside. Yes, technically you could say, this was an area of interest, which gave us a reaction, then price violated, so we had a supply and demand flip. We have inefficient pricing all over the impulse move to the upside. Just map it out. Top of that, guys, we also have this hidden hourly refined down to the 15 minutes, sitting inside a discount level. So basically, guys, when you mark your swing low to swing high, and we're looking for long opportunities, we definitely want to be mapping out zones or levels of interest inside a discounted area. So in other words, areas that are going to be of interest for buyers. So anything below, guys, anything below the 50% median right here of, the premium and discount tool is where I'm looking to map out my zones. We do have the extreme right here, which you could also drop down to the 15-minute, guys. And refine it down. Price never came down to this point, but this was definitely a level. This would have been the extreme. If price would have broken below this level, then we obviously have a change of character. And same thing, guys, we would just be looking at to see how price would have broken below. Look at our price action and definitely repeat the same process. Kind of just map out an area of interest, or an area right before that impulse to the downside, guys. Once we had this trade running in profit, guys, yeah, this is where I went break even. I did want to talk about another position that you could have taken. Let's say you missed this move, guys. One thing about swing structure, price is going to have substructure. Obviously, we have a strong impulse. This is going to be our swing structure, swing low, swing high. And, we have what we call substructure, or as I like to call it as well, internal structure, guys. So obviously for price to retrace down to our hidden hourly zone, you're gonna see some type of bearish order flow, and this is very important when you're taking entries strictly off the hourly, or even if you want to drop down and take trades and enter off the 1 minute. You want to see how price is trending down back or retracing back to your zones. This is very corrective price action, meaning it's more probable that price is going to tap, react, and definitely hold and continue its course. Why? Because, you know, during this bearish price action, this bearish order flow, we do have liquidity being built up. So this is a type of inducement, guys. We do have trendline inducement, giving it more reason for the market to you know, to sweep out its liquidity and fuel its move and continue on the way up. Once we have this break even, we also have, guys, a break above. We have a break of structure here of this internal structure. So now we have our internal structure aligning with our higher time frame swing overall bias. So the bias is bullish, and, you know, internal structure right now just flipped to bullish as well. We do have this order block right here. Let's say you would have missed this move, guys. Do have this order block right here. You have a break above with this break even, you know, with strong momentum to the upside. It's a strong momentum candle. Definitely have some type of inducement. I'm sorry, not inducement. You have inefficient pricing. Just make it a little bit smaller here. Just put it here. And also, guys, you have some form of equal lows which price, you know, that's another confirmation we definitely look at. So you have a strong impulse to the upside on the break even, so break above, break of structure above. You do have inefficient pricing, which we all know is one of the confluences that we use. You have inducement with these equal lows, and you have a valid unmitigated order block. Price definitely swept, corrected all this imbalance, all within the internal structure, guys. So let's just say you would have missed this move, you could definitely take advantage of this move right here. And with this level right here, guys, you could have just taken the whole zone. I believe the whole zone is about 10-11 pips, guys. There's no reason to take a median entry here. You could do so if you want to, even though it wouldn't have gotten triggered. If you compare these zones, this hidden hourly, even refined on the 15-minute, guys, this is a really big zone. And I do like to take median entries because I see it happen more often than not. Price will tend to mitigate that 50% median. Then you also have, you know, you have zones like this, guys, and you could just definitely take the whole zone. And this is a paper trade. I was talking about it with one of my members in the community. I did not take this trade. I did take this position. This one, I just wanted to see how it played out. I wanted to remain conservative, guys, and I was just happy with going break even and letting the trade play out. Didn't want to get greedy. And as you can see, let's just say you would have targeted right here, guys, the same as the 1 to 10, right below our swing high structures would have been a 1 to 6. So overall, you could have potentially banged out 16R in just this whole move. And guys, this is exactly what happens when you wait for, you know, these high probability setups. Same thing, let's just say, and these were just taken, guys. This one was just taken off the hourly. Lately, the market conditions haven't been the best, so I've just been focusing a lot on, you know, just trading the hourly bias. I do drop down for my session when I sit and I trade New York and look for potential entry opportunities on the 1 minute if it meets my entry criteria, guys, because there's definitely a lot of percentage that you could take advantage of. However, you don't want to be leaving any money on the table. You do want to trail your stops or manage your trades properly. Make sure you're protecting your capital, go and break even, you know, things of that nature. But yeah, I just wanted to talk about this move, guys. I think it was a beautiful move for EU. Market conditions have not been the best lately, considering everything going on around the world, guys, and not just for, you know, the foreign exchange market, for stocks, you know, crypto. Everything's a little bit hectic right now. And yeah, guys, you always, you know, we just want to focus on high probability setups, and I think there's a lot of insight that you could take just from this move alone. You know, the market repeats itself, guys, and you just want to be trading the bias of the market. You don't want to be going against the market. The reason for that being is if you're literally not trading with the market or with the bias of the market, guys, then at that point we're just gambling and our probabilities do drop. We want to be trading, you know, with the markets, with the most probable bias. It's more probable that price is gonna, you know, push higher if we buy low, if we're in a bullish market, and vice versa if we're in a selling market. That price is gonna keep trending down if we buy high, you know, to continue its course down. You know, there's just more probability when you trade with the market. You do want to be focusing with your most current price action. At this point on, you know, this was my most current, guys. You know, we did have a break of structure, change of character, which signifies a shift in sentiment, basically a turning point in the market. You know, with this sweep right here, guys, yes, this was a sweep, but price could have definitely reacted from this point on, swept these equal highs to continue lower. So yeah, this is a turning point. Once we get that break above, you know, that's with the strong impulse right here, guys, then, you know, we can mark this out as a change of character. This is definitely a turning point in the market. So now we could start looking for long opportunities. Price could definitely get to this point. This is something I'm not really worried about. I will be trading the buy sell market, so obviously focusing on my most current. You guys could look for some entry opportunities here. Just same thing, watch how price enters and comes inside your zone. And also, you know, just if you do want to trade this, you could do so, guys. It's just with me personally, I do like to focus on my most current and just kind of trade the buy sell the market. So my main focus is going to be longs, depending on how price is coming into the zone. If I see price coming in with strong momentum, then you know, you do want to focus on your most current price action. Yeah, guys, I'm going to be dropping a few more of these videos. I do offer